Welcome to Quick Bite, your fast and friendly Florida insurance.
Hello. This is Roshonda, agency owner of the Isom Insurance Group here in the sunshine state of Florida. Welcome back to another Quick Bite episode, your fast and informative insurance market update. Today is Wednesday, December 3rd, 2025, hump day. And we're diving into something that's on many homeowners' minds across Florida and the United States: rising homeowners insurance costs. The article review we are reviewing today, homeowners insurance costs could spike over the next 2 years, gives a fresh look at what many insurers are projecting for 2026 and 2027. Whether you own a condo, a beachside home, or a suburban house, this update matters. So let's dig in, see what's behind the increases, what you should start doing, and what you should start doing now. According to the recent reporting, homeowners across the United States may see insurance premiums increase by as much as 16% over the next 2 years. An expected 8% jump in 2026 and another 8% in 2027. This is according to the Fox 35 Orlando article that's on the screen. That's a significant shift, especially for homeowners here in Florida, where we are already paying some of the highest rates in the nation. Insurance is now eating up more of the typical homeowner's total housing payment than ever before. So why are rates going up so much? Let's unpack the reasons. Rising rebuilding and repair costs. Construction and rebuilding costs have soared. Materials, uh, labor, supply chain constraints are causing insurers to adjust pricing to reflect the increasing cost of claims. More frequent and severe natural disasters, if I could speak today, with climate change and increasing weather events, hurricanes, floods, wildfires, wind, hail damage, insurers are seeing a higher frequency and severity of claims that pushes premiums up. But good news is we did have a quiet hurricane season this year, because hurricane season did officially end November the 30th. So we did not see any major storms hit Florida. So that is definitely a plus. Underwriting pullbacks and reduced competition in high risk markets. In many high risk areas, think coastal Florida, flood zones, hurricane prone regions, insurers are tightening guidelines or scaling back policies. So less competition plus higher risk equal rate increases. Another reason, inflation and general economic pressures. Even outside of storms, inflation and material labor costs increases raise the base cost to repair or rebuild homes if claims are made, and gets passed on via premiums. So, with all of that being said, all that adds up, and for many homeowners, that's a real financial hit. Here in Florida, with hurricane season, wind exposure, flood zones, and high rebuild costs, the pressure is even stronger. If your policy renews in 2026 or 2027, expect potentially higher premiums. Don't assume your old coverage limits or deductibles will hold the same cost. Even if you didn't file a claim, inflation and risk alone can raise your rates. This isn't just some states. This affects coastal states, risk zones, um, and those exposed to severe weather, which means Florida, among others. So, what can you do about it? This is the perfect time to take action. Here's what I recommend: schedule a full policy review. Know exactly what you're covered for: wind, flood, replacement costs, contents, deductibles. Next, compare your current premium to what similar homes in your zip code are paying. Excessive risk zones often trigger steep increases. Number 3, review your wind and flood deductible. If you haven't updated in a few years, consider whether it still makes sense. Number 4, confirm you have adequate rebuild value and replacement costs. With building costs rising, underinsuring can be dangerous. Number 5, consider additional protections, flood insurance, wind mitigation credits, insured value reviews, especially if you're coastal or in a high risk area. Because waiting until renewal might be too late, premium increases could arrive before you realize it. This isn't a temporary blip. Analysts expect these upward trends to continue through 2027. What this means long term, homeowners may see insurance becoming a larger portion of their housing costs rather than a small add on. In some places, coverage availability could shrink, deductibles could rise, or insurers could leave markets considered too risky. For Florida homeowners, especially those with older homes, beach or flood prone property, or older roofs or structures, now that's the time to cross your fingers. It's time to get ahead. Um, in all fairness, this article is kind of saying they project that the rates are going to go up. But I have read or gone through, even on this channel, some other articles where it looks like the market might be softening. So we'll just have to wait and see what the market really does in 2026. If today's quick bite resonated, maybe your renewal is coming, maybe your premiums just jumped, or maybe you're buying a new home soon. No, now's a great time to get a no obligation policy review. We'll walk you through your wind deductible, flood exposure, replacement costs, and make sure you're properly covered before the next storm cycle. If you found this quick bite helpful, please like this video, share with your friends or neighbors, and drop a comment below with any questions you'd like for me to cover in a future episode. Quick Bite episodes now drop Monday, Wednesday, and Friday at 2 p.m. Eastern. This video is for educational purposes only and should not be taken as legal, tax, or specific insurance advice. Please consult a licensed insurance professional about your unique situation. This is Roshonda with the Isom Insurance Group here in sunny Florida. Thank you for watching, and I'll see you next time. Please stay safe out there. Bye.
Thank you for watching. Visit us at isominsurancegroup.com.